So let's talk about the tariffs for a second because everyone wants to talk about it. We're back down to 10% on everybody except for the China and Mexico, 25% tariffs. Canada and Mexico. And then China, we're at 125. They banged us for 145.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Peranio.
Hey, it's KP coming to you live from Washington, D.C. What an eventful couple days since my last video. The Mortgage Banker Association is here. It is their Advocacy in Action Week. So we'll be attending that conference tomorrow. And I believe the Texas Mortgage Bank Association up here as well. I'm not part of that one, but it's good. I think I've been here since yesterday. And I also a part of the Broker Action Coalition. So PRMG is representing wholesale brokers, one of 4 lenders on that board, and they start with the dinner tomorrow night for the board, and then meetings all day Wednesday, and we'll be on the Hill lobbying to senators and representatives talking about trigger lead reform, FHA reform. Why the hell did you take the H-1B visa out of non-permanent resident aliens? We have an insurance crisis in America. 1 in 7 people don't even have insurance, literally pay less than $100 a year to insure their home. New Mexico, West Virginia, and Mississippi are the highest percentage states in that category. But enough of that. Lots going on. I'm going to talk about what happened with mortgage rates and the flow of money and all that. But the setup is really all the tariff talk. And so some hot takes here, some different takes, trying to interpret it with my own brain and not watching any news. I do not watch CNN or MSNBC or Fox News. So I am just, I was locked in on CNBC all day today. Don't sell, don't panic. If you're a long-term investor, this rally will snap back. There was evidence this morning, just a whiff of potential good news that was fake news, that President Trump might consider a 90-day probationary period to figure all this tariff stuff out. And the stock market ripped. I mean, immediately ripped. And you can go look, see where institutional money put their money to work on that false report. He is not. The certainty is that he is not doing a 90-day. But there was some really good certainty that came out that I think is worth mentioning. So if all the tariffs on the poster board last Wednesday on Liberation Day came true, Goldman Sachs up their projection for a recession from 35 to 45%. That's if they all came true. And we know today there's some more certainty that they won't all come true. And I'll get into that in a second. But this whole thing is about free trade versus fair trade. We do not have free trade. We do not have free trade. And I'm also going to tell a personal story here in a second. Not only do we not have free trade, we are broke. So you have to kind of like read through the tea leaves. Like, President Trump is trying to negotiate from a position of strength. He's not going to come out to all these nations, which China knows it, because they slapped a 34% reciprocal tariff on us over the weekend. And they're the biggest thief, I would say, of us when it comes to free trade. It's not fair. It's unfair. But we're broke. We are broke. So just every single conversation, when if you don't believe that we're broke, if you've never said we're on an unsustainable path, our GDP, our debt-to-GDP is 122% DTI, debt-to-income ratio. We spend way more than we take in for years. So we are broke. I can relate. In 2007, I took a 90% pay cut. I was doing well at age 30 and 31, started to buy some assets, didn't keep a lot of cash. I didn't buy cars, fancy cars, or, blow it on a bunch of crap. I thought I was doing the right thing by buying land or buying property. I bought a bunch of stocks, which, by the way, I still hold. I am not a financial advisor. I'm not responsible for your losses, only your profits. I still hold a bunch of what's called the Mag 7 stocks at a cost basis even a third of what's today in a 401k. So when I retire, hopefully it's there and it keeps growing. Got a long way to go to retirement at age 48. But I had to deleverage. I had to sell where I thought my dream home would be in Austin, Texas, on, right there, on the lake. I'm in the back of River Place, literally an acre and a half on the water. Had to sell that lot, made a little money. I had a yacht. I thought I was being good. It's the only thing I bought. Say yacht, just is a boat. So the only thing I did, it was stupid, super stupid. And had to give that back to the bank. No damage on my credit, by the way. And we're going through that reckoning right now. You thank God someone's doing something about it. I don't know if this is the right path. I don't know what the outcome's going to be, but we are dead ass broke. So my 10-6 method, try not to be a 10 to get that message through to you, but we are broke. And so we're not exactly, negotiating from a position of strength. Our consumer's strong, and we're going to find out this week with Q1 earnings by the money center banks when they come out. Bank of America, Citi, Morgan Stanley, JP Morgan Chase, they're going to tell us how the consumer's holding up. Hey, we also have inflation information this week, CPI and PPI, which is one of the mandates the Fed has to fight, which has been inching up this year. That is sure to move markets this week, plus anything that comes out of President Trump's mouth. So just start with, we are dead broke. What are we going to do about it? The path is unsustainable. We have a budget debate going on here in DC. We have tax cuts to potentially be extended and even more tax cuts granted, possibly capital gains or some other stuff. And when I see tariffs, I see a shift to consumption tax. In the state of California, 29% of people who live in California pay zero income tax. So a little bit of a shift away from income tax, giving breaks to service workers on tips, tip income. We shifted after COVID, after buying all the goods and running all the toilet paper and paper towels, off the shelves. We started going, hey, all right, I got a little extra money. I got some stimmy checks. I got a job that's growing. I could quit jobs and make more money across many industries. And people shifted to services, and services inflation ran instead of goods inflation. And that can happen again. This economy is very resilient. People are very resilient. They don't have to go out and buy expensive stuff if we raise all these taxes. They could just chill out and buy cheap stuff, shift their stuff, and, spend more on going out and vacations and food and all that. So anyway, I'm a big fan of the U.S. consumer, but we are dead ass broke. And I was dead ass broke. Well, at least I took a 90% pay cut in 2007, and it happened in the span of about 2 months. And rebuilt from there, and built back better, built back stronger, and just kept my head down and kept working. So we'll talk about free trade versus fair trade. Everyone's arguing about it's not a tariff calculation. Of course it's not. But there are other things that nations do to rip us off. And some of them already come out and said, we're going to do something about it. So that was some certainty. I'm going to give you an example. So, China, obviously, we have all these, tariffs the Biden administration and Trump 1 put on them. But you know what? China just sold their shit through Vietnam. And then, Vietnamese people would rip off the Chinese label, and then Vietnam would sell to us. That's why Vietnam, Cambodia, and other nations around there that are usurping whatever rules we have on China to sell us Chinese goods were tariffed so high. And it's not a calculation based on just tariffs. It's also based on the trade imbalance. So we're trying to get things back in balance. In Japan, there's a 700% tax on rice. 700%. People in Louisiana would love to sell on that, or the people in, South Texas. There's no American cars there. And the EU came out today. Ursula, she came out and said, hey, you know what? We want a good deal, but we're going to protect our interests. See? They're protecting their interests. Why can't we protect ours? I don't get it. It's like everyone's mad that we're trying to protect our interests. So here's what happened in 2001. It's very interesting. And by the way, this all unpacks rates. This is the flow of money. Is our economy strong? Is our GDP good? Is labor any good? And what's the Fed going to do? Who sets the rates? In 2001, the World Trade Organization, they allowed China to enter the WTO. And when China entered the WTO, they have this weird kind of like scoring the way they set trade. Basically, anything that's a non-tariff policy, this does not go into the calculation of whether we have a balance with the nation. That's why that poster board got put up last week, because that's actually what's going on. It's actually our trade imbalance. I understand that not every consumer around the world, other nations, are the United States. And so, some of these places just, they can't, I don't know that the trade balance will ever happen because, these nations just don't have the buying power that we do. So I've never thought that to be the end game. But nations are coming here to negotiate. Vietnam spends $1 for every 14 that we spend over there. They've already come to the table. Japan came to the table this morning. Bibi Netanyahu was in the White House speaking today with President Trump, and they came to the table, talk about what to do. So there's more certainty that this is a negotiation, and they are coming to the table. Over 50 nations have come to the table, and they're coming up with ideas of how they can cut a deal. And that's ultimately what is going to happen here. And so back to the Goldman Sachs stat. Goldman, about a third of all of our imports have exceptions, right? So, we're at like 2.3% on $3.2 trillion in imported goods currently. Now it's up, and Goldman puts it at 12.6%. Okay, not 20, not 15. And that's before today. Before those negotiations, 12.6% tariff on $3.2 trillion. So, that's a lot of money. If we end up at 10%, the baseline, it's, maybe the trade balance goes down. We're talking about $300 billion a year coming in. That's a lot less treasuries to have to sell, and that's on consumption. So we don't have to raise taxes. The Democratic Party does not want to extend the Trump 1 tax cuts. That's a $4 trillion. Oh, that'd be a 6. That's a $4 trillion raise of taxes on Americans. $4 trillion. Okay, that's more than all of our imports, by the way, in a year. So, and that, by the way, is over 10 years, that $4 trillion raise. So where do we get the money to pay for all the stuff that we want to do when you're dead ass broke? That's this whole thing. So if we can get some money from here, get some money from there, get some trade balance here, get some trade balance there, we'll see where we land. We'll see where the GDP is. The jobs were hotter last week, although some prior reports were revised down. But the unemployment rate is at 4.2%. 4.2% is the end of the year target by the Fed's summary of economic projections at their last Fed meeting. We are there now, right now. Okay? So the first week of April through March, we are at the Fed's end of year target. Cuts are coming. Cuts are coming, and that liquidity will help, the stock market for sure. It'll help seize up credit. But the Fed does move slow to cut. So they have some other things they can do. They already reduced their quantitative tightening. They have some balance sheet maneuvers that they can make. They can help out with credit. They could buy treasuries. In essence, that's kind of what they're doing with less QT. But the Fed has some moves they can make before they do an intra-meeting emergency cut, even though the president is pressuring them. The 2-year yield, which most closely follows the Fed fund rate, which is at 4.375, between 420 and 450, is down around, I believe it's around 3.74. So there's a lot of room to make cuts today without a blink of an eye. Of course, the last time it happened, 100 basis points of cuts, 10-year Treasury yield went up. 10-year Treasury intraday touched below 389 on Friday, and rates went crazy. We had huge locks in our industry. And so we know what's coming. We know there's inflation reports coming out. We know that labor is softening. We're at 4.2% on currently on unemployment. And we know that nations are coming to the table and cutting deals because we're dead ass broke, and we need to create some balance and pay for our government and shift to more of a consumption taxed economy as opposed to income-based tax economy, which, by the way, in the jobs report, wage inflation was up 3.2%. Okay, so that's down. So wages are not going up. It's also a sign of softening labor, which the Fed has to deal with. They're looking at labor. And if they have to choose, they're going to choose defending labor so we don't go into deflation. Stagflation is a lot of the talk. Deflation is way worse. Everything shrinks, everything goes away, people's income go to zero, and companies don't hire. So let's keep an eye out for all that stuff. Going to be lobbying here in DC over the next couple days. It's really cold. My dumbass didn't really dress for it. Hope you guys have a wonderful week. I'll get back Thursday, probably in the airport. Cheers.
Hey, it's KP coming to you live from Newport Beach. Man, I was literally just out here like 30 minutes ago. I grabbed 2 tacos and a margarita. I got my sunglasses, puppies. Get back out here, fog rolled in, no sunsets, freezing. I almost got run over by a biker just now. Busy week, a lot went on. Just want to get another shout out to Equity Prime Mortgage executive Kevin Delory, good dude. Battle over the years over AEs and broke bread at AIM Fuse, had some cigars. Good dude, man. He lost his battle with cancer. The Lord giveth and taketh away. So, got this here for our fallen soldier on today. It's just cancer sucks. So, say a little prayer if you haven't heard about Kevin, and to Eddie Perez and everyone else at the EPM team. Okay, so I was having a coaching mindset session with Steve Scanlon at Rewire today, and he brought up VUCA, rhymes with my son Luca. VUCA, volatility, uncertainty, complexity, ambiguity. Times are all the above right now, especially this week. So I'm going to try and break it all down for you and get you some nuggets to take home with you. The Mortgage Banker Association was doing Advocacy Week this week, working with the Home Buyer Privacy and Protection Act. And there's a trigger-lead bill that is in front of Congress. So all I have to do is bring it to a vote. And MBA had some great speakers, sponsored by John Rose from Tennessee, and he's a Republican, and Richie Torres from New York. Got a chance to see both of them speak this week. Broker Action Coalition was also up in D.C. this week. They had workshops all day Wednesday while MBA was on the Hill, and then the brokers went and took the Hill on Thursday, which I helped with that, talking to 2 Democratic senators in Virginia, trying to get them to get on this bill. And hopefully this is something we can continue to have bipartisan support like it did last year and get it passed. So really good to see advocacy in action all week. Got home last night. Funny little quick story for you. My 5 o'clock flight was delayed to 5:40, connecting through Atlanta on Delta. And I just had this feeling that, once a flight gets delayed, it could get delayed more. I might miss my connection. I was literally in the Uber 10 minutes from the airport. With an hour and 3 minutes to go, I bought a direct ticket on United to LAX for $3.99. I got the last seat on the plane, the one in the aisle with its back up against the bathroom that doesn't lean back, and every single person that used the restroom and the cart bumps me over and over and over. It was miserable. And this morning I woke up and I got a text from Delta that my connection had a mechanical in Atlanta, and I would have been stuck in Atlanta overnight. So chalked that up for a travel win. No drinks yesterday, just had my first cocktail, just had 1 margarita. I'm not advocating drinking. I know we have a lot of people who are fighting demons, as we all are. But it's good to be back home. Dad of the year. I missed my kids' spring break all week. We got to a beach house here at like 4:30 after my final last call. It was very busy. Got to run in. All good. Okay. Hey, shout out to Halcyon, Kirk Donaldson and team. They just landed their 300th client. So Kirk, Elizabeth Boonin, who's literally on the IRS advisory board, straight API to the IRS, getting data straight to the IRS, from the IRS, blowing up the 4506 process and making it modern, among other things. They have a bunch of stuff that they do. So check them out if you haven't already. Dom, Bridget, the whole crew. They're all great. Okay. Why did interest rates go up when the stock market was selling down? I thought it's stocks and bonds. Stocks or bonds, one way or the other. Why did we have dislocation in the market? Well, let me just say, dislocation is a term that the Fed actually looks for to see that credit markets are seizing up. And that's when they want to start making maneuvers. Maybe not necessarily an emergency cut in between meetings, but maybe what they'll do is they'll do some credit repo facilities, do some euro dollar swaps. The US dollar is down 3%. I mean, I saw Neil Kashkari, the Minnesota Fed governor. He basically said, it was stress in the market. So what we just witnessed was not dislocation. And if you compare it to COVID, you compare it to the dot-com bust and all these other crises we've had in the past, it actually wasn't as bad as that, although it did happen very fast. We saw treasury yields go up, which means interest rates got worse. So now we all got to pull through our locked pipelines and make sure that, we get stuff handled. And then wait for the next time for treasuries to come down. I think they're at 444, which is a little bit higher than the range of the 435 we're in. So were we in this permanent range or not? Look, got some music here. We have a statue for lifeguard Ben, who died saving another person's life, right out here. Jamming here on Friday night before I go to a dinner a little bit later in Laguna. So the treasury and bond market, threw up a little bit, but it's not dislocation. So there's some order. I did not expect to ride roller coasters in Washington, D.C., but this was a roller coaster of a week. So I needed that mindset session, make sure that I was handling single task at a time, try not to multitask, and just knock down whatever was in front of me. And it was a very stressful week. Anyway, all good. Got through it. What I will say about bonds being agitated is that it's a lot of unwinding. The MBS team, MBS Highway team, Dan and Barry did a good job explaining the basis trade, which is kind of like people, buying futures, which is the massive, humongous market, and levered 100 times, 100x leverage, selling, future calls, options on futures when they own futures. And, when you have to unwind trades, which I had to unwind some trades on my little trader account, didn't exactly go my way this week. But the market is cold, heartless, and unforgiving. My trader account, which I'm highly levered, but it's just kind of a little gambling account. And boy, did I lose this week. Waking up on a couple mornings, liquidate, just selling at like the lowest price of the year or in a year on stock prices. But it's okay. It's back. It's making some money. I put some more puts and call strangles on there. But that's what happened in our bond market. Again, when stocks are going down and bond yields are going up, that's a dislocation. Now, it didn't rise to the level where the Fed needed to do anything because it all got handled. No hedge funds that I know of blew up this week. Remember in August when some hedge funds blew up with the yen carry trade 3 years ago or 2 years ago. I think it's 3 years ago when all the banks blew up, getting sideways on assets they had to mark down, which ultimately ended up not even being risky. That didn't happen. So we survived this week, and the stock market actually had a pretty good week considering it started from a low point from all the sell-off of last week after Liberation Day. So let's talk about the tariffs for a second because everyone wants to talk about it. We're back down to 10% on everybody except for the China and Mexico, 25% tariffs. Canada and Mexico. And then China, we're at 125. They banged us for 145. Since 2001, since China joined the WTO, the World Trade Organization, $18 trillion of our economic production and GDP has been shipped overseas. 18 trillion. So, got to do something. And this 90-day pause, hopefully they can work something out and come to a deal. And so I think, President Trump, by the way, tipped everybody off. I'm not on Truth Social, but I joined it because he put a post on there in the middle of the week and said, now's a good time to buy. And if you had bought like even $1,000 worth of out of the money QQQs, you could have made $1.2 million on a $1,000 trade. So that's how crazy this week has been. And so if I get another stock tip for the president, I'm going to act on it. But I don't sit there and stare at screens all day because I have a full-time job and side hustles and construction and 4 kids. So the spring break, something's got to give. So anyway, very crazy week. The bond market settled down. It settled down outside of the range. The rates are a little higher going into the weekend. So we'll see what next week brings. We've got retail sales. Like, how bad is this stuff? How bad is retail sales in the month of March, which is all kind of seen as stale data, which I'll talk about CPI and PPI, talk about inflation here. Everyone's worried about the inflationary pressure that tariffs will cause in the future. Rightfully so, because prices will be higher. Will we adapt? Will we not buy cheap Chinese crap? how do manufacturers that have been setting up for decades to make iPhones, which I'm on a Samsung. Time to get on Team Android, everybody. It's made in Korea. But, how do all these companies that built all of their basis around Chinese factories, for decades, how do we get around that? It's going to take years for us to repatriate that and bring production to other facilities in America. But maybe it'll cost us president the midterm election. But if things get going here at home, who knows? Long term, it could be a win. I'm not saying that ultimately is a path. I think there'll be carve-outs. Apple's committed $500 billion to spend here at home. So, all right, China, you buy some of our, farming goods, and we'll carve out Apple, or we'll reduce the tariff rate, or whatever the case may be. So we're going to find out what the deals are that get cut. And there will be deals, that's for sure. No worries. Cute dog. You dog fans? You little doggies? So today, normally, CPI would be market moving. Negative 0.1%. And only 0.1% up on core CPI. So we're 2.4 and 2.8 on headline and core. Those are great numbers. Doesn't matter. That was March. And last week was Liberation Day, and this week was market stress. So, PPI came out today. It was also negative. 2.7 on the headline. Oil touched $55 a barrel. That's huge. I mean, oil's in everything. Energy is the basis for everything we produce and do. So, those are wins. So, I know core is the number that everyone prefers to look at, core readings for CPI and PPI and PCE, because they exclude food and energy. Food is down, energy's down. So what we pay, which includes food and energy, is down, or it's going up less. So there's a lot of disinflation still happening. I think if you take out housing from the CPI, we're 1.7. That's below the target. But, the Fed is going to be very, almost got run over. Thank you. Literally, it would be a KP video if I didn't almost get run over. Oh my gosh, here comes my 9-year-old, almost 10-year-old girl and her friend, and Serafina, my 6-year-old. You got to take a look here. Hi, monkeys. You're on LinkedIn.
We're going to the beach. We're going to the beach, and I'm going to sleep over.
Okay. All right. Y'all be safe. Anyway, so now we're looking at what's going to happen with tariffs because everyone's worried about inflation. Are we in a recession? What's going to happen with treasuries? Are people going to continue to raise cash positions by selling things like treasuries or stocks or whatever? Probably. So we're going to keep an eye on all that. And hopefully we'll get this trigger lead bill passed. And I will get some more info out to you on Monday night after our senior management meeting. You'll have a great weekend. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Peranio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.